Hey there YouTube, what's up? Welcome back to my channel, Morgan with the Y, and I'm your host, Morgan. If you're new to this channel, welcome. If you're not new, thanks for joining me again on my journey to financial, I won't say financial freedom, but just paying off my loans is the goal for now. I don't mind working. Anyway, before we get into the meat and potatoes of this video, I'm going to start off by asking you all a very important question. Have you paid on your student loans this month? If you haven't, that's totally fine. You can join me while I go pay mine. So today's video, I'll be talking about why you need to be paying on your loans even if you haven't started yet, and you need to be paying on them in 2020. So COVID-19 has brought the world with a lot of complications and difficulty right now, especially financial hardship. And because of that, there have been some financial benefits to this that have or financial measures that have been made to make life a little bit easier for folks. And one of them being the suspension of federal student loans. So this means right now, U.S. federal student loans are not gaining interest nor are required to be paid back right now, which is amazing news for people who have been struggling with student debt right now. So this is only one of several measures of the CARES Act. So this relief measure, particularly that I'll be talking about, was originally supposed to only go on until September 30th. But as many people are still unemployed and the situation hasn't really improved, the measure was extended until the end of 2020. And fingers crossed, it'll be extended again further into 2021. That would be awesome. So if this is your first time, once again, joining me, or you haven't seen any of my videos before, definitely check out my first video that was on how I'm paying off $180,000 of student loan debt. And in that video, I go over how I have started and then continue to pay on my student loans and was able to get those under control. Definitely check that video out. But if you already have seen that video, you will know I highly stress the importance of interest, which makes right now a super critical point in paying on your loans. If you can, like right now, you need to just pay on your loans. Just if you have some money in your pocket, just go pay on your loans. The inspiration for this video came from a TikTok I had seen that was shared with me on Instagram.
I started with $80,000. I have been paying for 10 years. Last year, I paid $6,000 lump sum because that's really the only way to get it low. That took it down to $76,000 after I've been paying for 9 years. The grand total is I have paid $120,000 and I still owe $76,000. How the
Which is ridiculous. I do hear there's some questions going on with her numbers. Some things don't entirely add up, but her scenario isn't entirely unheard of. I owe a lot of student loan debt. Student loans are predatory. I will say that till the day I die. Student loans are predatory. But the scenario in which it sounds like she got herself into this situation is why I'm here to help you guys out. It sounds like there was some miscommunication to her on how she should pay off her student loans. And I'm glad you guys have me to help you here as your financial student loan payback fairy. I can't wish all of your debt away. I don't work like that, but I can help you pay your debt. So anyway, join me for the rest of this video. So the important part that is the meat and potatoes of this video is how can you take advantage of this 0% interest period going on right now. And like I said, interest is the portion of debt that keeps you in debt. If you could just pay on your principal, the amount you took out, easy peasy, your debt would be gone. But that's not the case. And the reason why people stay in debt is because their interest keeps growing, and if they keep paying their minimum, they're never going to end up paying their principal. So in the TikTok video in question, she paid $6,000 once a year, and she's like, that's the only way you can get it down. This is false. Your loans do have an annual interest on them, but they don't just accumulate interest once a year. Your loans collect interest every single day. So this is why it's best to pay on your loans every single month. I mean, if you want to pay on your loans every year lump sum, I don't like to see that much money disappear from my bank account at one time. But you need to pay on your loans every single month as much as you can. If your minimum is $300, you need to be paying $500. If you can't, you do not have to. If you want to meet the minimum, that is fine, but it helps you get rid of your debt faster. Because let's say your payment is $300 and $150 goes to your interest for that month. That means only $150 is going to your principal, but instead, let's say you paid $500, then the $150 is going to go to your interest and $350 is going to go to your principal. And then you're paying down that balance much, much faster than what you originally were. Also, something else you can do right now is pay on your loans that you know have higher interest. Right now on my account, it shows all of my loans is 0% interest, so I've had to do a little bit of digging to see which of my loans have higher interest rates than the other ones, and those are the ones I plan on attacking right now. One method that you can do that I spoke about, that this is something that I did before my loans went into repayment in general, is finding some money, taking out of savings. Maybe you have to sell some stocks, maybe you have to, I don't know, sell clothes out of your closet, but collect a portion of money, take that money and just pay off one of your loans. This is a method that we did before my loans went into repayment. Was we found some money and we took that money and we paid off as much of my debt as we could before my loans went into repayment and before that compound interest really grew, how much I actually owed and how much interest my loans were accruing at one time. So highly recommend it. If you do have some money you can throw at your loans right now, I highly recommend maybe paying off one of your loans or two of your loans at one time if they're small enough and they're high interest. So if you owe, let's say $1,000 and it's like a 5% interest rate, just pay it off. Just take the money, pay it off. It's not collecting interest right now anyway, but it's one less thing you have to worry about that's not collecting interest and forever keeping you in debt when this is all over. Also, something important to keep in mind, I understand that some of you, like, your loan payments may be high anyway. If you want to refinance your federal student loans, which I think you can refinance them, you should definitely wait on refinancing them. I mean, you can't get better than 0% interest. Trust me, I've looked. So right now it's the best time to just wait, pay as much as you can, and then consider refinancing. Refinancing is a crucial part of paying off your student loans because sometimes, I mean, when you're young and you're 18 years old and sometimes you do or don't have a cosigner, you have a very short credit history, and so, or maybe not a great credit score, so your interest rates are super, super high. I mean, my loans range from 3% to I think 7 or 9% interest rate, so that's pretty high. So we did have to refinance some of those loans, but 0% right now sounds pretty great. So those loans that I'm paying the most attention to right now are the ones that I can pay off the fastest. If you guys like the information in this video, please like and subscribe. And if you haven't seen it yet, like I said, go check out my previous video on how I'm paying off $180,000 of college debt. And I will catch you guys on the flip side.